Righto, Money Miners. Bloody, what's going on, boys? What is going on?
It's all happening. Quarterly season.
Quarterly. Gee, I love it. Pilbara. Bloody, a rise on quarterly. A bit of positive news for lithium today for a change. Dale has a message to the shorters.
You sure did.
We'll go through that. What other quarters got? We've got Northern Star, Genesis, Core Lithium, Adriatic, delay again, but still.
Yeah, no quarterly, just an update. Not a good one.
Yeah, and return of a friend of the show.
Oh, I can't wait to talk
We'll
about
build
that
the suspense on that one.
one. Oh, mate, before you even
Which friend of the show?
go further, did you see the commenter on YouTube yesterday pointing out our chicken legs? Saying we've got to cover up our chicken legs.
Wouldn't be mine, far out. Mine have got a bit of bloody meat on them these days.
I read the comment.
Might be guilty there.
I couldn't help but think someone was trying to chamath us.
What's chamath, mate?
Those who know.
Yeah. Another podcast, actually.
Oh, there you go. Right, boys. I've had a look behind the hood at KCA. I've heard about a bit of a operational meeting that went down. Now, this goes to the core values, to the heart of KCA. Apparently, there was a new employee on board. They're having a bit of a meeting.
Yeah.
And this employee said one word. No.
Ooh.
Not good.
Ooh.
New employee didn't probably know what
Yeah.
KCA is about yet.
Yeah.
Had to sit in the corner for 2 hours.
Wow.
Because we know that no is not a word ever used in KCA, don't we?
They don't know how to spell it, mate, I heard.
They don't, and that is not from a lack of education. That is a lack of, like, if they write it in a text message, it just comes up as asterisks. Like, it can't even be sent out from a KCA email. It just gets blanked out. It's just automated system they have. No is not an option. Because remember we talked about the water viper?
I remember that one, yeah.
I'll bring it up here. Have a look at it. The water viper. That was an example of when a problem was brought to KCA, washing down the footwall at a flat dipping ore body, and they're like, shit, we've got some normets here. Let's plug a hose in, do a bit of engineering masterpiece to this machine, and they converted one of their normets into a
water viper.
high-powered hose jet, just solving problems for their clients.
I can picture that scenario, and I'm sure someone came up and said, guys, at KCA, this is our problem. Guess what they didn't say? They didn't say no.
They didn't say no, because you've only got to look at how many ITs they've got on the website. There's like I'm flicking through them here. Have a look at how many, and you know why there's so many? Because I think initially when they started, they had ITs, and people called up and said, "Oh mate, have you got any? I need to hire an IT." In Adam's head, he knew that he didn't have any available. He's like, "No worries, mate. I'll sort one out for you." And so he just went and bought one that afternoon. They don't keep clients waiting. They just buy more ITs. That is the
can-do
mentality.
attitude if I've ever heard of one.
Can-do attitude, and that's why there's bloody shitload of them. Now that you see all the ones coming soon, even took it a step beyond, didn't even wait for the call, just ordered even more to anticipate the calls. That's what KCA is about on the equipment front. I bloody love it as a business. No is not an option. Love your work, KCA. It's because they're underground miners.
That's right, mate. They know that you just got to say yes. Get it done.
There's no bloody within reason. There's just no stop work and do a bloody JSA. Just like find a way to get it done. Yeah. But it's a bit you can't get hurt in recruitment, but if you do that in underground mining, it doesn't work sometimes. But take the old school philosophy, brought it into a new school business. I like it.
Just
love
KCA.
your work, KCA.
Matty, just yesterday before you got into the studio, I was talking with JD. I was
at 6:30 in the morning.
No.
I was a bit late
yesterday. Yeah. you normally do beat me, yes.
Had some shit on. Anyway.
I was talking about the Bulong H-Power. There was an old Bulong nickel project. I don't know if you ever heard of that one.
No.
So
who does it belong to?
Well, I think the answer is no one anymore.
No one wants to claim ownership of this one.
It's genuinely abandoned, but not too many people, not everyone knows that there are 3 H-Powers in Western Australia. Obviously, Ravensthorpe, Murrin. Well, Bulong was the Bulong forgotten H-Power of Western Australia. It's a bit of a bloody disaster though, mate. It's abandoned. It's actually a bit of a disgrace. It's only 40 k's out of Cal, but they've got like a tailings facility which has failed, and it's a disgrace in my
failed as in just let go.
Yeah, I mean, there's a salt lake nearby and all the rest. You know, it's not good. It's not how things should be done, right? But mate, as the nickel market fluctuates once again, I'm relieved to know the modern day miners won't have the same disregard for what's left behind because they've got Ben Swan.
Ben Swan, the tailings dam saviour. Inject Ben Swan into any situation like that, Trav, and things just get fixed, don't they? Isn't he? Just the ESG specialist. What's the S stand for, boys?
Social.
Social. Great evidence I've seen in the media today of some positive social action by mining companies on the back of these recent nickel shutdowns. We saw the other day Wyloo staff being reshuffled to iron ore, but me being an underground miner, most underground miners that get a job offer to go to iron ore would, or as we call them, landscape gardeners, would respond with, fuck that. So Stewie Tonkin from Northern Star has injected himself into the scene, throwing the Northern Star arm out for the contractors to take them on if they need work. That's good social action by both open pit and underground. I bloody love it. Benny Swan from Future Proof, he's applauded this proactive behaviour. You got to look after the men and women that get the bloody dirt out of the ground, I say. So
Sure do.
Good work, everyone there helping those affected by the nickel shutdown. So look, just a general service reminder, just get in touch with Benny Swan about bloody anything that just looks way too boring, hard or time-consuming in the ESG arena, because pretty much everything in ESG fits those categories. Mate, climate risk regulatory requirements, we talked about them last week. Get in early. If you get in early, you get in cheaper. Sustainability reporting, because anyone that does a sustainability reporting for Greenbushes, which is Benny Swan, you have to take that person very seriously.
Does he do it for Greenbushes?
Mate, Talison Lithium.
There you go.
Bloody legend. Everything else, ESG, Benny Swan, that future proof. He's the future, he's the past, he is everything ESG.
The ESGC.
The only name you need to remember in ESG. Love your work. Cheers, Benny. Righto, let's get in. Pilbara Quarterly, boys. Let's talk bloody numbers, percentages and millions and everything else. What's going on?
Oh, mate, I can't wait to talk about the big statement from Dale on the short sellers. But beforehand, to set it all up, this was, I think, one of the most anticipated quarterlies of the entire season, maybe the most. I mean, everyone knows it. Pilbara's short interest is a massive 21% of the shares outstanding have been short sold, and you don't see that very often for a $10 billion company, let alone one that doesn't actually have any debt. So, I mean, you can see that short interest continue to rise over the last 12 months on this chart from Short Man. So the quarterly came out and the stock actually traded up 6%. Clearly, expectations are a bit more grim than came to fruition in the quarterly that surfaced today. I think we can summarise it. There was no downgrade in production, which is a bit of a positive sign. 176,000 tonnes of spodcon produced in the quarter. Cash balance is down $900 million to 2.1 billion. So obviously a fair chunk lower than last quarter, but 758 million of that was tax that had been flagged.
Yeah.
Beforehand, and obviously they're spending a lot on capex, growth capex as well. And on that note, while P680 and P1000 are still marching ahead, Pilbara are dialing back the speed of that capex, deferring some non-essential projects to the tune of $55 to $100 million for the FY24.
So it's pretty sensible stuff all round. And then they noted on the call there was nothing else non-essential that could really be cut out of that. But it was also cool to see on the unit cost front they just continue to drive that down. So obviously a good portion of that's going to come naturally from going to your P680, then on to the P1000. But you could see this quarter already as production drove up 22%, unit cost came down 14%, and I'd expect to see more of that in the quarters to come.
That's 100%. I mean, that's what you want to see, is really optimizing your costs that you can do when you have the benefit of scale. And you look at that operating margin in a quarter where, Pilbara's peers are bleeding, their operating margin's still 50%. And I mean, like, to be clear, spot concentrate prices have come off a fair bit since December already, so you can't expect them to maintain that margin. It's shrinking pretty quickly in this price environment, but that's still really impressive because of the control that Pilbara has been able to have over their unit costs.
Absolutely.
Yeah, and that's a unit operating margin. So before all the big stuff gets added in over the top, eh?
Yeah, exactly. It was also interesting to see when they received payments. So looking back to the September quarter, they had an issue at the port in Port Hedland, and that meant the sales were weighted to the September quarter, so the last month of the 3. And the exact same thing happened again here. And in an environment where the costs are coming down, it's not great, but it seems like that was fairly much out of their hands.
Yeah, because I think what had come out is their average realised price was still above $1,000 for that quarter. So we're obviously going to see that come down a lot next quarter.
Yeah.
But with the lower operating costs, you'd think there's a chance of at least breaking even, if not better.
And also Also bearing in mind that the price we quote most frequently is for 6%. They are producing a 5.2% product. Yep. So there is a markdown again.
Yeah, that cash prudence, which we talked about in the capex deferral, is flowed through to the dividend guidance as well. So they say they're unlikely to pay a dividend for the half year just gone, despite their divvy payout ratio of 20 to 30%. So I mean, if they're pulling it for the dividend corresponding to the half year ending December, I don't think you should be expecting a dividend for the half year ending June ahead either, given the environment there.
Yeah, you'd be hard. Yeah, it's a bit selfish asking for a dividend in this lithium climate, I think.
Yeah, and from the way the stock reacted, I don't think anyone's too upset about that. There was another line that stood out to me, guys. 98 million spent on stamp duty and one-off investments, and they got a question about this, and it turns out only 15 million of the 98 related to stamp duty, and that was on the Altura transaction from a few years back now. That means 83 million in one-off investments. So looking around,
that sounds like shares in listed companies to me.
Yeah, it sure did, mate. And we know, I mean, there's a few names on the shopping list. It's not a big one. Wildcat comes to mind. Azure, given we're talking about the December quarter here, came to mind, as well as PMET, which we have had confirmed in the past that they're shareholders in. So
I hope all that 83 million went into Azure because that's the only one that stayed. Isn't, as we said, Azure, it is the jubilee of lithium, isn't it? Potentially.
Yeah, like in terms of selling at the top.
In terms of selling at the perfect time. And
been reading the history books again, Matty.
Having the deal in place, that is, because everything else has unfortunately fallen off the cliff.
Kerry Hermanis 2.0, mate. Kerry should come on the podcast and talk about selling at the top.
We might have thrown a shout out.
You should.
Shazza Reed, you got to get back to me, mate.
And there's also a person in common with the Azure story as well as the Jubilee story. We can let the money miners guess on that one. There was one more comment that stood out from the call, guys, and that is from Dale Henderson, the CEO of the company. So he said, we have a playbook for tough lithium prices, as well as saying our eyes are on the long-term prize. So
the playbook.
Cast your minds back just to 2020, not really that long ago at all, and the playbook was acquire when everything else is beaten up. I mean, they were beaten up as well, but when players in the arena are beaten up and catch the ride on the way up coming out of that when the prices rebound and everyone wants lithium again.
Yeah, part of that playbook, you'd probably argue, has also got to do with how they manage costs through that environment and also manage production as well. But I agree with you. I think the playbook includes being very opportunistic when you've got competitors who are distressed and seek to be active in those moments of distress. Let's see how they are. I think they can even be even more predatory if they've got a balance sheet and no one else does.
I reckon you're right, mate.
There'd be a time, very time dependent, but because you wouldn't want to go too early. And as we've seen, it might be FY24 outlook from the inventory research we read last week might be a bit quiet. Yeah. So, yes, it'll be when is the question.
It's a good point, Matty, because if you cast your mind back to the last lithium cycle, right, it's not like a deal was done with Altura right as lithium prices fell off. It actually happened right as just before they started picking up again. There was a big bloody bear market there, a really big bear market.
And we're only, 1 to 2 months in of I know it has fallen significantly from the big highs, but it's this recent fall from the sustainable levels that is the one, and we're only probably 1 to 2 months into that. So.
Yeah. I mean, you can think about Bold Hill, that fell over more than a year before they picked up Altura, and there's a period before a company collapses in which they're in distress as well. So it'll take a while when you're running through it,
Yeah.
Right. What's the big quote from Dale, Trav? You love this sort of stuff.
Oh yeah, I think everyone wants to talk about the short sellers, right? And the Pilbara short sellers. In fact, he even fielded a question in relation to that one. I think we've got to play this one for the money miners because it's a great quote.
As to what the hedge funds are worried about, I hope they're shaking in their boots. I hope they're worried that there'll be other government stimulus and other things which tends to pop up, because what we know from this industry is that pricing and demand can turn very quickly, and that could deploy a short squeeze. But only time will tell. We'll wait and see.
How about that, guys?
There you go.
Shaking in their boots.
You'd call it the daily news. I love it.
Alrighty, gents, should we rip into Northern Star?
Oh God, the big back into the gold. Gold still just the safe haven, you'd say, during these commodity ups and downs. Gold just ticking along. Northern Star.
Matty, this one's got your name all over it. What was the outcome?
As a former Northern
Well,
Star
it's a
employee,
good
mate.
overall, very good quarterly for them, it appears. So free cash flow of 102 mil across all Kalgoorlie, Yandal and Pogo. So KCGM and Carosue Dam were the standout performers on, I guess, the ounces and grade that come out of it. And we're always talking about North America, on the back of the poor news from Red Lake for Evolution. But look, Pogo for Northern Star, 67,000 ounces. They're obviously, for the quarter, they're progressing towards this 300,000 ounce per annum run rate, guidance of 260 to 280 this year. So the grade was the lowest for the last 4 quarters, but they milled the most tonnes. And that operation added 37 million for the quarter, if you including the growth capital and the exploration, and it's added 60 for the first half of financial year. So it looks like Pogo's starting to get some legs about it, which is good to see. As I said, that's 6.7 gram mined grade. The reserve grade is 8.5 grams, I believe. So it's still well below that, but 38% of that underground ore was development ore from the jumbos, and obviously with development ore, it's always going to be a lower grade, because if anything is narrow vein, you're taking a wider width of the ore body compared to the stope width. So they're pursuing 30% of the total ore to only be development, so it's a bit higher this month. And the jumbos, and we talk about remember North Americans, until Northern Star got over there, I don't think North Americans had ever bolt and meshed with a jumbo, a twin boom jumbo.
What do they do?
They either did it with air legs. They had a separate machine called a Boltec or a bolter,
Right.
and so you'd bog it out. One machine would go in and put the ground support in,
Yeah.
and then they'd have scaling machines that pull out rebog, I assume, and then the actual bore and jumbo would go in. So before Northern Star got there,
Gotcha.
that doing it all with the one machine just wasn't a thing. They'd never really seen it done before.
Is that why so many Australian miners saw, I think, opportunities in North America, because they thought we mine differently, we can bring this
do
there
it quicker.
Yeah,
Yeah,
okay.
yeah. So there was, but it's trying to get get them on board with it.
Yeah.
So it's like you're presenting, because people don't like change in mining. No. So, and it looks like I know they've got a mix of expats and North Americans as jumbo operators over there. I think they want to progress eventually towards all North Americans, because it's a lot cheaper than flying Australians over that want bloody $100,000 a bloody shift. 1,636 metres with 5 jumbos. So they're averaging over 300 metres per jumbo. Good to see. Looks like they're really getting the development on track over there.
Yeah.
And
how does that rate compare to your capability, Matty?
Oh, geez, I had me good days and me bad days, boys. Depends if they gave me a bloody nipper throwing bolts. Anyway.
That's good to see there.
Tough. God, once I found one, I put a bloody chain around their neck and didn't let them leave me. I'm like you are with me. You want to especially if they had some darts as well. Can you roll us a ciggy while you're down there, mate? Anyway, the big thing for Northern Star, as we know, is this KCGM expansion from the super pit, expanding from 13 million tonne to 27. Like, it's huge. $1.5 billion project. They look to have spent around 300 mil already, so they're guiding to spend a bit over $500 million for FY24. So, and where this has taken it, they sold 112,000 ounces for this quarter out of KCGM at so that's about a 450,000 per annum run rate. But they're expected to operate by 650,000 ounces by FY26 and then increase it to 900,000 ounces by FY29. So this is where they're in a growth phase. Like this, Mount Charlotte and Fimiston Underground are going to be each running at 4 million tonne per annum. So it's 2 4 million tonne mines. We talk about Liontown being massive which it was going to 4 million tonne. They're going to have 2 of those there. That's huge operation.
Amazing.
So with that mill, the KCGM mill, they did say they had issues with the flotation area of the mill, so the recovery was only 81%. They were targeting 84% because they previously said they were going to get back up to that range after the mill shut in the first quarter, but they didn't really reach it. But it still performed well on grade and ounces. But they said this expansion project for this mill, it'll see all the ultrafine grinding in one place. It sounds like some now is done at the Gidgee plant as well as the Super Pit one. And once this whole circuit is built, there's going to be longer residence time for the gold, like it's doubling the residence time. So going to be a big driver for getting that recovery up. But they're just in that phase of can't knock the particulars when they're in this. There's obviously a path to get there eventually. So cash, what have they got? Cash of a bit over $1 billion, 2.6 billion in liquidity. So net cash position of 238 million. So operating at 13 million tonne now. As I said, 23 million tonne by FY27 and then 27 by FY29. So this is progressing them from, they're guiding 1.6 to 1.7 million ounces for this year. This is going to get them up to 2 million ounce producer. So they added, and looks like they're still maintaining hedges. So they added 185,000 ounces of hedge this quarter to at 3,400 an ounce. So
3,400?
3,400. Yeah.
Wow.
So
you can hedge at 3,400 now.
Apparently, they want to maintain about 20% of the ounce profile as a hedge. So they've got to deliver for the next half 200,000 ounces at $2,570. So I think they're gradually adding hedges. These ones are going to come off the next couple of
4 years out, don't they?
Yeah, I guess, as Stewie Tonkin said on the call, cheap insurance for them to maintain that hedge profile. So,
interesting.
Yeah, different to your likes of, Genesis, which we'll talk about later, completely unhedged. So lot smaller scale.
Stock's up. What is it? Stock's up 6% today.
5-6% today. So
they're a $15 billion market cap company who they produce $100 million in free cash flow.
Yeah, so their free cash flow yield is still pretty low.
Yeah.
And then I think they'd argue that they're in a big, capital investment.
Totally. Yeah.
So I think I guess the thing with Northern Star, since the Saracen Northern Star merger happened, it hasn't. I don't think it's ever gone above that. Like they've paid out some figures and stuff, but since that merger, it hasn't really it's gone down and sort of putted along, but it hasn't been really accretive yet.
Yeah.
For a shareholder.
Yeah, and it hasn't been a giant deal since either. They've all been sort of small deals since then.
I'd say they're keeping their eye on everything with $2.5 billion liquidity, but I think a lot of the efforts will be going into getting this right. So it's just it's a long. Seems like it's going to be a long road for them to reap the benefits if you put it in context of when they got the super pit.
Strong gold price will bloody serve them well though.
Can't say more. You can't say they're leveraged to anything else. So there we go. My first employer, Northern Star, back in the day.
Well done, mate.
Cheers for getting me to WA.
Now to where your dream employer could or should be was Adriatic, mate. They're the that's the best mine in the world to work at, isn't it? I mean, in
Bosnia. Bosnia.
I don't know if it's the best mine, but it'd be the best
location
mine so you could go on good R&Rs.
Yeah.
Anyway, tell me about the mine, boys. What's going on?
Alrighty, the one they call the Big Bosnian. So base and precious metals is what we're talking here. We've spoken about them in the past, and we've spoken quite favourably about them in the past. I think that's sort of reflective of pretty decent grades. They didn't have a huge capex bill. Construction for a long time was going all right. Strong early cash flows, and they've got a pretty high level of insider ownership in the company. So a lot of these pros still hold relatively tight, but today's announcement wasn't the best. And just comparing the stock's performance against its sort of peers, so their revenue is really coming from a mix of base and precious metals, which, you could argue will serve them well. So the announcement today, first concentrate has been delayed, and it's not been delayed for the first time. They said it's been pushed back by a few weeks. It was a sort of result of not having the right people, as well as some equipment delays. So that the people side of things I'm a bit less understanding of, but the equipment side, there's a bit more out of their hands. They also noted that debt repayments have been pushed 6 months. So it's kind of interesting to put them side by side and see, hey, we're being delayed by a couple of weeks in first concentrate, but we're pushing back the debt 6 months. Now, if you cast your mind back from when they initially wanted to be pouring first concentrate, it makes you think, hey, that was meant to be Q3 last year. The 6-month delay makes a whole lot more sense now, given that we were anticipating cash flow a lot sooner.
And then on top of that, there's a new mine plan as well, right?
Exactly.
Yeah.
So just to round off on that debt, 10 equal quarterly repayments is how they're going to go about that. And it's going to be sort of in the vicinity of US $15 million per quarter starting at the very end of this year. So reading through the announcement, there were a couple of things that sort of stood out that I want to get into with you guys. So the first thing I sort of want to raise with you guys is reading through this announcement, they're pushing back the debt repayments. Now, casting our mind back to who they did this debt with, it was Orion, now private equity group. We know there's sort of no free lunches with private equity, and it makes you sort of think, what are the terms that they did this on? I'm sure they're going to get something out of this. They didn't reveal. But you need to bear in mind as well that Orion are 8.3% shareholders last time they updated the market on that. So it's very much in their interest to get this going and get it going well. As usual, Adriatic threw in the statement, Adriatic remains fully funded for plant completion and ramp up.
Oh, fully funded, mate. That's why the raise back in August last year was for exploration purposes, because they were still fully funded back then.
We're going to get into that.
But what else? What else caught your eye in this, JD?
So there were comments around underground structural geotechnical studies that they'd done that didn't read too well. They also spoke about the processing plant needing a bit more optimization, and that sort of led into nameplate capacity only being reached by Q4 of this calendar year, as that means the ramp-up's just happening a bit slower, as well as first concentrate coming a bit later.
So by geotechnical, I think there was a quote in there talking about upgrading the ground support. So,
yeah,
which layman's terms, the ground is shitter than expected, and they need more ground support to make it safe and hold it up, and which costs more money.
Mate, in layman's terms, even further, they've had to chuck another DSI order in.
Oh, mate. Great for DSI in the Bosnian market.
It sure is. So the total outcome is that the total project cost has gone up from US 182 million to US 189 million. So this was just an update. The quarterly hasn't actually come out yet, but I thought it'd be sort of smart to cast our eyes back to the September quarterly, see where they're at, and see where they're going to come out at over the next week when they report. So they finished that quarterly with 68 million US. This is all in US figures that I'm going to go through. They anticipated a further 43 million in capex, and with the increased costs that we spoke about, you can make that 50. But they also drew down their final 30 million in debt, and then, you know, bearing in mind that you got staff and admin costs to factor in as well. If they stay steady, you could anticipate that they're going to come out around about $40 million. Now, Trav,
that's a buffer you're talking about for working capital while they're going through a ramp up.
Exactly. I mean, the question is that enough of a buffer before they, you know, start to see a bit of revenue and profit come in? But to your point earlier on that money raised for exploration, it looks quite prudent in hindsight. And I think there's a whole lot more we could say about that, but we can just leave it there.
Yeah.
So when is it? So con should be very close. First con
In a few weeks.
Yeah, right. So God, that's
You're-
delayed a lot.
Yeah, you've got a question there. Of, is that enough? And I saw a tweet from Paul Cronin on Twitter, and it's a very kind of achievement-y kind of worded tweet. We did it despite all the challenges over the past 18 months. It's done. Enjoy Vares, et cetera, et cetera. So it would be a real shame if it wasn't enough and they had to kind of top up a little bit more. But to your words too, JD, if it's going to be skinny, it might be wise to do that as well sooner rather than later. But yeah, I hope, and it seems like from the rhetoric that, and they say that they're fully funded. So until, mate, there's an old quote, fool me once, but I can't read fully funded and believe it 100% from these guys anymore.
Good bloody Netflix series there if you want to watch that.
I watched it.
Fool Me Once. How good is it?
Oh, mate, she killed him. She killed him. I ruined it for you. She killed him.
She did it. All right, boys, Core Lithium. Oh, you finished on that, JD?
Yeah, finished on that.
Oh,
actually, one more comment. They could get creative if they do need a bit of cash. We know someone we've interviewed in the past, Warren Gilman, has tipped in cash to this.
Go Queens Road.
Yeah. So, Core Lithium. Actually not a terrible quarterly today. So I was a bit concerned opening it up and seeing where they're at. They've had a pretty tumultuous last 3 months. But firstly, you look straight at the cash position. And as we know, we read this one back to front. 29 million went out the door after operations, and then you got a further 46 million in capitalised costs across development and exploration. But they ended the quarter with 124 million in cash, and that's down from 202 at the end of last quarter. But bearing in mind the company is debt-free, they've got an EV now of 300 million. So the debt-free bit really stands out given how close they were to having just built the thing. That's sort of reflective of how they funded that. But it means they're not in the worst position in the world. So obviously they're a high-cost producer. It's been well publicised that they stopped mining not too long ago. They're on care and maintenance now, meaning they're going to just be processing the stockpiled ore until mid-2024. It's calendar year. It means their operating costs are going to come right down as they're not mining. So they gave some revised guidance figures as well as pulling any expectations for the next financial year. So the revised operating costs are down to Aussie 1,375 using the midpoint there. Plus you're going to have $3.5 million go out the door for care and maintenance costs. They also
at US 900 a tonne for spod. They might break even on the unit operating, and it'll be losing on the overheads.
Yeah, that's right. And they're producing a 5.5% concentrate. So quite a bit better than most other players out there that we talk about. They're targeting still 80,000 tonnes for the full financial year. There's one other aspect that was actually pretty good to see. Their recoveries jumped up from 50% to 60%. When we first spoke about the company probably 6 odd months ago, we were obviously very critical of the huge exploration expenditures, the pumping heaps into early works and all these sorts of things. But something else that was spoken about quite loudly on the calls was the recoveries, because they were pretty shocking. So it's good to see that they've turned, although they won't be mining. So
still not the flat line recovery they had in the entire DFS.
In the DFS.
Every single year.
Who would have thought in reality it's a bit different to the study?
Yeah.
So the final comments on that one is that they are doing this review and very interested to see where they come out with spending reductions, cuts to studies, cuts to exploration, cuts to corporate costs, because that $124 million could see them survive a little while longer. And, without debt, you're not going to hit the wall. So.
Yeah.
But they were all about speed to market, like DMS only, no float. But
running.
That is why they're probably still surviving, because if they didn't have the speed to market, they wouldn't have that cash now.
And the fact they've got no debt, but you still look at the cap structure there, and it's an EV of $300 million for an asset in care and maintenance. I mean,
to say the equity couldn't go down from here.
Yeah.
Alrighty, Matty. Back on the golds.
Oh, I was looking forward to this one. Always want to know, is Gwalia making money? So, Trevor, you still a St. Barbara shareholder?
I am, yeah.
Oh, there you go.
Wait,
Not related.
I actually have to do a ding for this, because as part of remember St. Barbara, you got your Genesis shares distributed to you in specie. So
just do a ding.
I've got,
it's
a very, mate, it's 10/5 of fuck all in Genesis.
Well, okay, December. So they pumped out 35,000 ounces. So all in sustaining costs $21.41, but I never once you add in growth capital and everything, just be wary of the old all-in sustaining cost. But it doesn't look too bad. Remember, St Barbara were producing over 2,500. So it seems like they've brought the cost down. I know they've dropped some trucks off. I think they dropped the jumbo off. I think they've tightened it up and managing the contract a lot better so that less things are getting more done at a lower cost. So Ulysses Underground, that's the one that's coming online. So it's ready. The first portal firing will be happening in the March quarter. So that's obviously another feed that's going to be coming. And look, their cash, they got 192 mil, but when you look at these cash figures, remember the Dacian money has been added on because they've taken over Dacian, so Dacian's cash come onto their books. So 192 up from 186 last quarter, so not going backwards. They did, though, exercise $10.5 million worth of options. So if those options weren't exercised, they would have lost money for the quarter as a company. So anyway, lucky they sneaked them through. So the Leonora operations, so that's essentially Admiral and Gwalia. So it added $11 for the quarter. So that includes the growth capital and exploration all in. So
you put that in there,
Yeah. So the Gwalia mine grade, you can see actually lifted from 5.1 to 5.7 grams. So the mill grade remained pretty flat.
How does that happen?
Some might be still on the ROM.
You're mixing in other dirt.
Yeah, you might have lower grade coming from Admiral, and you got third party ore the Linden ore that they purchased. But but that 0.6 of a gram mightn't sound much, but look, if you're hauling dirt from 1,800 metres underground, that's a big deal when you're deep. So grade is king when you're hauling that far. The mill's running it around that 1 million tonne per annum run rate, so it's still being underfilled. 1.4 million tonne capacity, remember. So they reckon they'll be able to fill the mill during this financial year using 100% owned Genesis ore. So, but note that 30,000 tonne of this quarter was purchased from Linden Gold. So it was an ore purchase agreement, not a tolling agreement.
Matty, just a question for you on that. The Gwalia mine grade lifted from 5.1 to 5.7. Is that a strategy from Genesis specifically to kind of high grade the mine? Are they trying to mine specifically in the high grade areas?
I wouldn't know specifically, but grade can vary stope to stope. I would assume they're looking for targeting high grade, and because remember with St Barbara were on this other area as well. I think Genesis are really focusing on the main load, and I think they're mining some areas up higher. It said in the announcement as well. Okay. The grade does vary, but then obviously dilution plays a factor as well, and all that sort of stuff. How they do their mill reconciliation. Geez, that's a bloody Nathan Stortis question, that one. He'll give me the proper rundown on that. But it's all like what goes through, what comes out, the split of everything that's put in, the whole reconciliation to figure out, right, where do you, there's a whole bloody spreadsheet on that shit. Yep. But a lot of this whole fill the mill strategy, a lot of it's going to be in the intermediate term be coming from this Admiral pit. So you saw they mined 92,000 tonne at 1 gram for the quarter, but 42,000 of it was mined in December alone. So I think the tonnes are starting to flow a bit from that Admiral pit, so that's going to add a lot because if they're just cutting the portal at Ulysses, that's going to be still a while away. They did have, so there is upcoming, they got out the door, there'll be $43 worth of transaction costs. So relating to the St Barbara acquisition, the acquisition of Dacian, and the acquisition of the Kin assets. So all those payments are anticipated this year. Gotcha. So in March, they said they're coming out with their 5-year outlook, and that'll give some colour about how they're going to get to this 300,000 ounces. And I will crack up if it still says Tower Hill 2 to 3 years away, because every quarter it's I think we're up to 3 now.
Every year.
Maybe we're back to the 2. I don't know, but the 2 to 3 hasn't changed for the last couple of quarters.
Yeah.
That's the big one. Is getting, obviously we know there's a rail line that has to be moved for that. I think there was talk of starting the pit before that was could be started before the rail line was moved, but looks like a pretty good high, nearly 2 gram open pit. I think it was 2. Is it above 2? I think it's like 1.9 or something. But it looks like that's going to be a good kicker for him.
Yeah.
Raoul loves his pits. So
Yeah.
anyway, good to see from that. Gwalia appears to be making money.
Yep.
So it shows what some good management coming in can do to an operation that hadn't been run well.
The stock's up 3.6% today. Another one of the most shorted stocks on the ASX, by the way.
It's been most shorted for bloody ages.
Yeah, and obviously there's some, like you look at the market cap, and it's a challenge of just backfilling value with performance now, which they've got the execution capability to do. The market.
I wonder if like shorters look at it and think. If they're thinking, right, the management premium's too high, or the fact that a lot of these ounces are coming out of Gwalia and they consider it such a high risk operation, depth, seismicity, and like the risk that something like that could hinder the operation. I don't know if I would imagine once they get more operations online and they're not just relying on getting Gwalia right, I think that risk profile would change a lot. So what's your thoughts on that?
I don't know. We should make friends with some short sellers. I think the reality is most short sellers, they're not necessarily naked short. They'll pairs trade it with something. They'll be short this but long something else. I actually don't know anyone that is short Genesis, and I don't know their rationale. But yeah, it's not a bad theory.
Give us a call if you're short Genesis. We want to talk to you. What's going on with the old crazy feline? Oh, Wildcat.
Crazy feline.
God, tell you what, you've bloody mentioned him twice this week, JD, in a lithium downturn.
Mate, I opened the announcement this morning and I saw that they are getting into a 100,000 metre drill program. I was just a bit taken aback. Like, we spoke about their healthy cash position, and I would have thought they are doing what they can to just savour that cash and just see them through. But, I mean, they're doing as far to the opposite as that as you possibly could. That is a huge amount of drilling. We're not going to get into the weeds on this one, but they got 6 rigs. They did 43 kilometres of drilling over 2023. So I just thought it was super interesting to see that a company's taken that strategy and they're just going hell for leather at spending money and doing putting meters into the ground. And let's see what the result of that is in a year's or so's time.
Well, if you think of, like, let's play a hypothetical that we're going to have a rough year for lithium and there's a chance it might recover next year. We don't know. No one knows. But all that drilling, resource upgrades, potential study, like if it does rebound, they're then primed to be acquired at a point. So it's probably a positive thinking to go down that route because they did that bulletproof raise.
Yeah, that's got to be the view they're taking, right? Because you don't want to get to that position and then find out that the lithium price is still where it is and can't raise any capital. Then, you're just a sitting duck, right?
She's an all-in bet for this year.
And then maybe Pilbara is the one that is circling.
Oh.
And Matty, you don't need a maiden resource to get acquired. You just need an exploration target.
I'll say one announcement come out today that had to get retracted where the exploration target showed the contained amount of mineral. You're not allowed to do that. You can only give a ton. Can't do the calculation.
Gotcha. I think the exploration targets and the companies getting acquired pre-resource are very much things of 2023. I highly doubt we're going to see that this year, although maybe I'll eat my words.
All right, mate, I want to wrap up with it's a bit of a funny one, but it's also a bit, I'm going to get angry.
You have a certain accent when you're about to do what you're about to do. It's funny.
I saw this and I didn't even want to mention it.
Oh, no, mate. It's a busy news day. I've intentionally decided to leave out talking about Perseus this quarterly to bring this one up. It's all about making sure we shine a light on some amusing but maybe not so amusing things.
Yeah.
Look who has resurfaced at a new junior mining company. Good friend of the show. Mr. Brett Lynch has gotten himself a new job. Brett, of course, was MD of Sayona Mining. And for the OG money miners who've been listening to us for quite some time, we were pretty vocal about our disgust with the 10 million shares in Sayona that Mr. Lynch retroactively wanted to be paid for prior work at Sayona, put to shareholders at an EGM and just approved. It was quite marginal from my memory. Not long after that, Brett abruptly left Sayona, effective immediately, and hence he was free to do whatever he wanted with the Sayona shares he had without having to disclose that on the ASX platform. So you'd have thought he might have a hard time getting a new gig. I'd have thought it'd be a bit tricky, personally, but don't be mistaken. This is the mining industry, gentlemen. Check out this announcement from Ionic Rare Earth today. Executive chairman appointed to oversee strategic direction at the company. It's quite the sight to see. You see there, Mr. Lynch, and I've highlighted here, Mr. Lynch's remuneration package aligns to shareholder outcomes and share price performance. Interesting. So it aligns to shareholder outcomes. So I thought, I'm not going to take that statement at face value. I had to take a look at the remuneration package myself. Maddie and JD, what do we got here? 420K per annum salary, rightio. And then sign-on incentives. This is an interesting one. Sign-on incentives, the first one there, you can see he's got the opportunity to buy some shares at 1.8 cents each, which is a price Ionic has traded at as low as for about a single week in the last 3 years, by the way. And then another sign-on bonus is 10 million shares, not options that can convert it and out of the money price. No, shares.
Just given.
Yeah.
Yeah.
So free shares, which...
What's Ionic trading at right now?
That equates to about another couple $100,000.
Yeah. And keep in mind, 10 million free shares was what we made the kerfuffle about at Sayona. So you must have a thing for 10 million free
magic
shares.
number.
Now to the long-term incentives. In total, there's 30 million performance rights here, which convert to shares at specific milestones. Key word in this appendix that details it is the word long-term milestones, but I'm going to read out a few of them. 10 million performance rights, which will vest on the 12th anniversary of Mr. Lynch's commencement.
That's a joke.
3 million performance rights, which will vest upon the demonstration plant at Makuutu producing a massive 30 tonnes of MREC at target spec.
30 tonnes.
Yeah, and that's the demonstration plant, which in an announcement to market just 6 days ago is set to produce first MREC this quarter already. So, that'll have plenty of input directly from Mr. Lynch, I'm sure. And we'll flash up the full list for the punters, but I think you guys get the picture. I think just to wrap up as well, I have to show this tweet from Chucky on the appointment. He says, with a managing director, COO, CDO, CEO, country manager and GM already in place, there is only room for an exec chairman for, in quotation marks, delivering uplift in value across the critical raw material sector and supply chain integration, whatever that means.
Imagine getting a job where you get paid 10 million performance rights for just being there a year later. You don't have to do anything.
No, he gets the 10 million performance rights on day of commencement, but they become shares in 12 months without any performance. Your performance is staying there.
Yeah, exactly. It's unbelievable.
There you go, Trav.
Mate, yeah. Surely, can we, as just, observers of the market, all sharpen up on this stuff and keep companies to better account? And, can we just rinse this shit out?
Couldn't agree more.
Righto, thanks. Speaking of rinsing out, I'm going to rinse out our bloody partners. Or opposite of rinsing. I love the partners. No performance rights here with these fellas. InvestorHub. Give Rory Stein a call for InvestorHub. Right, DSI Underground, keeping Adriatic alive. Terra Capital, McMahon Mining Title Services, Futureproof Consulting, Anytime Exploration Services, KCA Site Services, Brooks Airways, K-Drill. Hooteroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.